Hello, good evening, everyone. As we told you on the last day, maybe not in the last day, maybe prior to that, as we have already informed you, in order to discuss about this value-added taxation, we have invited a very good lecturer. Really, he is also a BSc accounting degree holder of our own university, and he is also a chartered accountant. Uh, and also presently he serves as the tax partner at Vijayrathan Company, a firm of chartered accountants. And also he is the director of Lanka Business Consulting Private Limited. And Mr. Nadika Suranjana counts over 9 years experience in this industry, taxation industry, both in practicing as well as in education. And also he has been conducting lectures in this particular subject, taxation, in many private institutions also. And also we should really appreciate uh, his humble acceptance of our invitation. This has been postponed once also. Now he's with us, and I request all of you to share, be exposed to his knowledge, and try to grasp as much as knowledge through these 2 hours, maybe 2.5 hours. Okay, up to you, Mr. Nadik Suranjan.
Yeah, good evening to you all. Sorry about the technical problem.
Good evening.
Hope you all are staying safe. And first of all, I would like to be thankful Udeshan sir, Sandurvan sir, for the Department of Accounting, giving me this opportunity to do this presentation on Value-Added Tax Act. Now I'm going to share with you the presentation that I'm going to discuss with you today. Hope you all can see the slides.
We can see, Mr. Nadika.
Yeah, thank you. And I will quickly move to the presentation because I have over 45 slides to discuss with you during this 2 hours time. Right, as you know, as you are aware, no tax can be charged or imposed without the legislation. So we have to have a legislation in place, or we have to have an act to impose taxes on the public. So if you take income tax, we have the Inland Revenue Act. If you take nation building tax, we have the Nation Building Tax Act. If you take economic service charge, we have the Economic Service Charge Act. So for value-added tax, we have the Value-Added Tax Act. So VAT was introduced in 2002 by the Value-Added Tax Act number 14 of 2002. So what we are going to discuss today is the key provisions of the Act that are applicable to your syllabus. So these are the areas I'm going to discuss with you today. Imposition of VAT, some interpretations, the concept of time of supply and registration requirements, and goods or services supplied in Sri Lanka, then non-taxable supplies, VAT on importation of goods, and the calculation part, how to calculate the VAT payable, and the obligation we have under the Value-Added Tax Act, and also the simplified value-added tax known as SVAT finally. Right. So if we look at the section 2 of the Value-Added Tax Act, which is the charging section, it says VAT shall be charged in two scenarios, in two occasions, VAT shall be charged. That is A and B. If we read this section 2, VAT shall be charged at the time of supply on every taxable supply of goods or services made in a taxable period by a registered person in the course of carrying on or carrying out a taxable activity in Sri Lanka. The second part is, the second scenario is, VAT shall be payable or VAT shall be charged on the importation of goods into Sri Lanka by any person. So I have highlighted some keywords that are there in section 2. So we need to understand the meaning of these keywords in order to understand the section 2 properly, this charging section properly. So for the time being, let's try to have a basic understanding of section 2. So under category A, VAT shall be charged at the time of supply. It says VAT shall be charged at the time of supply, that is the time at which it shall be charged. Then it says on what it is charged. On every taxable supply of goods or services. So I would like you to make a special note here. If you have a piece of paper and a pen, please do a small note. So under the Value Added Tax Act, supply of goods and services can be divided into two. Supply of goods and services can be divided into two. One is taxable supply of goods or services. Taxable supply of goods or services. And the second one is non-taxable supply of goods or services. Taxable supply of goods or services and non-taxable supply of goods or services. Then non-taxable supply of goods or services can again be divided into two. Non-taxable supplies can again be divided into two, namely excluded supplies and exempt supplies. Excluded supplies and exempt supplies. Okay. Taxable supply of goods or services, for the purpose of understanding these concepts, I am divided that also into two. Taxable supply of goods or services is also divided into two. Just to understand these concepts properly, one is supply of goods or services or supplies that are taxable at zero rate. Taxable supply of goods or services is divided into two. The first one is supplies that are taxable at zero rate. Second one is supplies that are taxable at the standard rate. Zero rate and the standard rate. So if we read this again, VAT shall be charged on every taxable supply of goods or services. So it is charged on taxable supply of goods or services. That means it is not charged on non-taxable supply of goods or services. That means VAT is not charged on excluded supplies and exempt supplies, right? It is not charged on excluded supplies and exempt supplies. So we will see what these are when the presentation goes on. Right, for the time being, we understand that VAT is charged only on taxable supply of goods or services made in a taxable period. We will have to understand the taxable period also. We will come to that later. Made by a registered person, which is very important, because only a registered person can charge VAT. If you want to charge VAT, first you must be a registered person. Because this is a special authority given by the government to you to collect taxes on behalf of the government of Sri Lanka. So anyone can't, everyone cannot charge VAT. You have to be a registered person if you want to charge VAT. So VAT can be charged only by a registered person. In the course of carrying on or carrying out a taxable activity in Sri Lanka. So there has to be a taxable activity carried on or carried out in Sri Lanka if you want to charge VAT. If there is no taxable activity, you can't charge VAT. So that is the item A of section 2. Hope you have a basic understanding of this. We will discuss the key words, meaning of these key words later. Item B, on the importation of goods into Sri Lanka by any person. On the importation of goods. When you import goods into Sri Lanka, you have to pay VAT. Here, by any person. You don't need to be a registered person to pay VAT on importation. When you import, you have to pay VAT. But here there is a small registration part also, but that is not the registration given under item A of section 2, right? So that's about the section 2. With this idea, we will go ahead. Now we are going to discuss about the meaning of these keywords. First, we will look at the meaning of taxable activity. I told you that there has to be a taxable activity that is carried on or carried out in Sri Lanka to charge VAT. Basically, taxable activity means 5 things. The law says there are 5 activities that can be treated as a taxable activity. There has to be a taxable activity. If you want to charge VAT, you have to do one of these. First one is, if you are doing a business, there is a taxable activity and there you can charge VAT. Second one, if you provide facilities to members as a club, association or organization, you are doing a taxable activity. Now in a club, you know, there are members and the club provides services to its members. The club is carrying on a taxable activity as per the Value Added Tax Act. So the club is liable to charge VAT. Third one, anything done in connection with the commencement or cessation of any activity or provision of facilities referred to in A or B above. That is, if you are doing something in connection with opening up a business, you are doing a taxable activity. If you are doing anything in connection with closing down of a business, winding up of a business, you are also doing a taxable activity. Item D, hiring or leasing of any movable property, or the renting or leasing of immovable property, or the administration of any property. So if you lease out any property, which can be a movable property, or it can be a immovable property, or if you administer any property, you are doing a taxable activity. If you lease out a building and earn rental income, that is a taxable activity. The last one, exploitation of any intangible property, such as patents, copyrights, or other similar assets, where such asset is registered in Sri Lanka, or the owner of such asset is domiciled in Sri Lanka. If you are exploiting of any intangible asset which is registered in Sri Lanka, or the owner of such intangible asset is domiciled, is residing in Sri Lanka, then you are doing a taxable activity. So if you want to charge VAT, you have to do one of these activities. Otherwise, there is no taxable activity and you can't charge VAT. Now we look at question number 1 to understand the meaning of taxable activity. A company which is engaged in the business of manufacture of articles has the following income disclosed for the quarter ended 31st March 2020. Under turnover, they have declared sale of manufactured goods locally, 1,200 million. Export of manufactured goods, 500 million. Under other income, they have disclosed repair services, 129 million. Scrap sales, 35 million. Rent income, 5 million. Dividend income, 4 million. Interest income on fixed deposits, 2.5 million. So identify whether the said items are chargeable with VAT and state the taxable activities into which the said items fall. Now the first one, sale of manufactured goods locally. That is basically your business, right? That is basically your business and you are doing a taxable activity, you have to charge VAT. So it falls under category A in the definition of taxable activity. Sale of manufactured goods locally falls under item A of section 83, that is taxable activity. Export of manufactured goods, same, that is your business. That also comes under item A of the definition for taxable activity. Repair services, that is where you provide the service. That is also a part and parcel of your business. It is not coming under any of the other categories of taxable activity. It also comes under your business. So it falls under item A of taxable activity. Scrap sales, same scenario. Item A of taxable activity. Rent income. Rent income. So that is also a taxable activity, but that is not your business. If you refer item D here, the hiring or leasing of any movable property or the renting or leasing of immovable property or the administration of any property. So you earn rental income by leasing out movable or immovable properties. So that comes under item D of the definition for taxable activity. It does not fall under business. It comes under item D. The last two under other income, dividend income and interest income on fixed deposits. That is not your business. That is not your business. That is your investment. You earn dividend income by investing in shares, and you earn interest income by investing in fixed deposits. So these are not covered in the definition of taxable activity. So there is no taxable activity. If there is no taxable activity, you can't charge VAT on it. There has to be a taxable activity if you want to charge VAT. So on dividend income and interest income, you can't charge VAT. Those are not chargeable with VAT. Okay. Right. Now we will move to the next discuss about the Meaning of taxable supply. So taxable supply means supply of goods or services made or deemed to be made in Sri Lanka, which is chargeable with VAT under this Act. So any supply of goods and services which is chargeable with VAT is defined as taxable supply. It says it includes a supply charge at the rate of 0%. I told you at the beginning, supply of goods and services can be divided into supply of goods and services. We again divide it into two. Supplies that are taxable at 0% and supplies that are taxable at the standard rate. Non-taxable supplies, we divide it into two: excluded supplies and exempt supplies. So already you know that zero rate supplies are coming under taxable supplies. So there is no problem with that. Taxable supply includes a supply charge at the rate of 0%. Right. Other than an exempt supply, you know that also, because exempt supply comes under non-taxable supply. So if something is coming under non-taxable supply, it is not treated as a taxable supply. But if you look at this carefully, something important is missing. What is that? It is silent about excluded supplies. It doesn't say anything about excluded supply. Though it comes under non-taxable supply, it doesn't say taxable supply does not include excluded supplies. It doesn't say like that. It is silent on that. Why is that? There's a reason. The reason is, generally, we categorize excluded supplies under non-taxable supplies. That's the general classification. But there are situations where we need to treat excluded supplies also as part of taxable supplies. There are situations. So I will explain all that during the course of the presentation. So that is why it is silent on excluded supplies. So you know that zero rated supplies are coming under taxable supply, but it does not include exempt supplies. So when you make a supply, you can either supply goods or you can supply services. Those are also defined in the Act. Supply of goods, these are not very complicated definitions. Supply of goods means the passing of exclusive ownership of goods as to another as the owner of such goods or under the authority of any written law. So you, as the owner of a particular good, you pass the exclusive ownership of the good to another goods to another person. So that is known as supply of goods. It further says it includes the sale of goods by public auction, the transfer of goods under hire purchase agreement, the sale of goods in satisfaction of a debt, and the transfer of goods from a taxable activity to a non-taxable activity. Now let's say you are doing a business and you are transferring, or if you are donating your goods, let's say to a temple, you are donating your goods to a temple, you are transferring your goods from a taxable activity to a non-taxable activity. That says there is a supply of goods even in that scenario as well. Now we will look at the meaning of supply of services. Supply of services means any supply which is not a supply of goods. Very nice way to define a word. Supplies are of two types, supply of goods and supply of services. Supply of goods, there is a definition given. Supply of services is defined to include all the services other than supply of goods. So what is not covered here? So everything is covered, right? So it says supply of services means any supply which is not a supply of goods but includes any loss incurred in a taxable activity for which an indemnity is due. So if you incur any loss in a taxable activity and if it is indemnified, it is also treated as a supply of service. Now let's say your stocks are damaged by a flood and you get insurance claim. Your loss is indemnified, right? So it is treated as a supply of service. Now we'll look at question number 2 and 3 to understand the supply, taxable supplies, supply of service. Question number 2, advise whether the following supplies fall within the meaning of taxable supplies for the purpose of chargeability of VAT. Supply of manufactured goods which is chargeable at the standard rate of 15%. You know, this comes under supply of taxable supply of goods or services. Because we divided the supply of taxable supply of goods and services into two supplies that are taxable at the standard rate are treated as a part of taxable supplies. Second one, export of manufactured goods which is chargeable at 0%. Though it is chargeable at 0%, it still comes under taxable supply of goods and services. That also falls within the meaning of taxable supplies. Third one, supply of computer, which is an exempt supply under the first schedule to the Act. Which is an exempt supply. Exempt supplies are not classified under taxable supplies. Exempt supply comes under non-taxable supply. So this does not fall within the meaning of taxable supplies. Right. We look at question number 3 now. Advise whether the following transactions fall within the scope of VAT as a supply of goods or a supply of service for a VAT registered company. Whether this is a supply of goods or supply of service. Sale of manufactured goods. What you do here is you pass the exclusive ownership of the goods to the customer. That comes under supply of goods. Supply of goods. Export of manufactured goods. Whether you sell this locally or whether you export it, it comes under supply of goods. Supply of goods. Disposal of machinery. Again, you as the owner of the machinery, you pass the ownership to the buyer. That is also a supply of goods. Fourth one, donation of manufactured goods to the government. As I told you as an example, there what you are doing is You are transferring goods from a taxable activity to an untaxable activity. That is also a supply of good. Supply of good. Next one, renting of part of business premises. There you are not transferring the ownership of the building or the business premises to the customer, right? So it's not a supply of goods, it's a supply of service. Renting of part of business premises is a supply of service. Last one, insurance claim received in respect of damaged stocks manufactured by the company. So they have incurred a loss in the taxable activity for which they have received the insurance claim. The loss is indemnified. That comes under supply of service. It's a supply of service. Now we'll have to look at the meaning of taxable period. So basically there are two taxable periods depending on the nature of the activities you do. There are two periods. You can fall under any of the two periods. Taxable period means a period of 1 month. B, a period of 3 months. So 1 month taxable period and 3 months taxable period. So the 1 month taxable period is applicable where any person makes zero rated supplies. So later we will discuss about the zero rated supplies. For the time being, if you are doing exports, if you are exporting goods, you are doing zero rated supplies. I will explain that later. So if you are an exporter, your taxable period is a 1 month period. Again, 1 month period is applicable where any person has commenced the business or started the project and undertakes to comply with the requirements of Section 22(7) of the Value Added Tax Act. So these are long-term projects basically. Now let's say if you want to start a company, start a hotel business, you first need to buy a block of land, construct it. So it takes a lot of time, takes a considerable period of time to make a taxable supply, to provide accommodation, to provide foods. So to make the taxable supply, it takes a considerable period of time. So those persons can register under Section 22(7) of the Value Added Tax Act. So if you are registered under Section 22(7), your taxable period is a 1 month period. Third one, if you are registered with the Textile Quota Board or Export Development Board, and if you are supplying to an exporter who is also registered with the Textile Quota Board or Export Development Board, your taxable period is a 1 month period. So the second taxable period is the 3 months period that is applicable to all the registered person other than those who are categorized under A. And even if they are categorized under A, if they want to go with the 3 months period, that is also allowed. 1 month taxable period. Now let's say if you are an exporter and if you do not like to come under 1 month taxable period, you can apply 3 months taxable period, but you need to get the approval from the Commissioner General of Inland Revenue before you apply the 3 months period. So the 3 months period commencing respectively on the 1st day of January, 1st day of April, first day of July and the first day of October of each year. In respect of a registered person other than A above, or who opts to submit quarterly returns on the approval of the Commissioner General. So there are two types of taxable period, 1 month period and 3 months period. Now this is a very important concept in the Value Added Tax Act, the time of supply. At what point, at what time that shall be charged? Right. That shall be charged at the time of supply. Time of supply is the time at which the VAT is chargeable. Now the Act, the Value Added Tax Act, has given 4 scenarios. The time of supply in relation to 4 scenarios. Now here under 3.1, we have time of supply in relation to supply of goods. If you supply goods, what is the time at which that shall be charged? If you go to next slide, 3.2, time of supply in relation to supply of services. If you supply service, what is the time of supply? What is the time of charging VAT? 3.3, time of supply in relation to supply made under an agreement providing for periodical payments. What happens here is you provide the good or service under an agreement which provides for periodical payments. You will get the payments in installments in the future, right? So what is the time of supply in that particular situation? And 3.4, time of supply on payment basis as directed by the Commissioner General. So under these 4 scenarios, the Act clearly identifies the time of supply. Now we go back to 3.1, where we have the time of supply in relation to supply of goods. So here the Act has given 4 situations, so 4 scenarios that can happen in a supply of goods. 4 scenarios have been given that can happen in a supply of goods. So having said that, it says out of these 4, what happens first? You have to identify the activity that happens first. That shall be the time of supply. Now we will look at these scenarios. The supply of goods shall be deemed to have taken place at the time of occurrence of any of the following, whichever occurs earlier. Whichever occurs earlier. There are 4 instances given. Out of these 4, what happens first shall be the time of supply in relation to supply of goods. A, the issue of an invoice by the supplier in respect of the goods. That is when the invoice is issued. B, a payment for the goods including any advance payment received. That is when the payment is received, including advance payments. C, a payment for the goods is due to the supplier in respect of, that is where the receivable is recognized. D, the delivery of the goods have been effected. That is when the goods are delivered. So 4 instances are given: time of issue of the invoice, time of receipt, time of recognizing the receivable, or the time of delivery of the goods. Out of these 4, if the issue of the invoice happens first, that shall be the time of supply. If the delivery of goods happens first, that shall be the time of supply. If you receive money even without issuing an invoice or even without delivery of goods, that shall be the time of supply when you receive money, right? So we'll have to see the activity or the scenario that happens first, it shall be the time of supply. So having said that, it says in relation to delivery of goods, if you deliver the goods today and issue the invoice within 10 days, even though the delivery of goods has happened first, you still need to consider the date of the invoice as the time of supply. That is applicable only where you issue the invoice within 10 days after the delivery of goods. Right? Notwithstanding the above, where an invoice is issued in respect of goods delivered within 10 days from the date of delivery of goods, the time of supply of such goods shall be deemed to be the time at which the invoice was issued. Though the invoice is issued after delivery of goods, in that particular situation only, you have to treat the date of the invoice as the time of supply. Now we'll look at the time of supply in relation to supply of services. Same situation, same scenario like supply of goods. Concept is same. The supply of services shall be deemed to have taken place at the time of occurrence of the following, whichever occurs earlier. 4 instances are given out of those four. What happens first shall be the time of supply in relation to supply of services. The service was performed, the payment is received, the payment is due, or the invoice is issued. Again, we have this 10 days story. If you perform the service today, and if you issue the invoice within 10 days after performance of the service, even though the invoice is issued later, you need to treat the date of the invoice as the time of supply. That is applicable only where the invoice is issued within 10 days after the delivery of after performance of the service. 3.3, time of supply in relation to supply made under an agreement providing for periodical payments. You supply under an agreement and you will get the payments in installments in the future. So that can be done as a hire purchase agreement or as an agreement other than hire purchase agreement. If it is a hire purchase agreement, the time of supply shall be deemed to have taken place at the time the agreement is entered into. At the time of signing the agreement, at the time of entering into the agreement, you have to treat the time of supply as the time of supply as the time the agreement is entered into. If it is a hire purchase agreement, even though you are supposed to receive the amount in installments in the future, if it is a hire purchase agreement, you have to be very careful, because when you enter into the agreement, so it is treated as the time of supply. You have to charge at that time. If it is an agreement other than hire purchase agreement, so that is fair. The supply shall be deemed to have taken place when the payment is due or when the payment is received, whichever is earlier. If it is not a hire purchase agreement, the time of supply is the time of receiving of installments, or is the time when you recognize the due amount. 3.4, That is a special situation. As I told you, now if you look at the time of supply in relation to supply of goods, you are liable to pay VAT, not at the time of receiving money. Now let's say you do the supply today and you are supposed to receive the payment in 6 months time. So if you deliver the goods today and if you issue the invoice today, the time of supply is today. You have to charge VAT today. You have to pay VAT today, not in 6 months time when you get the money, right? So VAT is not charged or payable on cash basis. We can say VAT is payable on accrual basis. Accrual basis, which might create cash flow issues to business. Now you do the supply today and you are expected to receive the payment in 6 months time, but you are liable to pay tax to the government today, right? That you will get in 6 months time. So which might create a cash flow issue to the business. Therefore, if you are badly affected by the provisions of the Act, you can get the approval from the Commissioner General of Inland Revenue to pay tax on cash basis. To pay tax on cash basis. You pay taxes only when you receive. After you collect it from your customer, you can pay taxes to the government. But you have to get prior approval from the Commissioner General of Inland Revenue. That comes under Section 23 of the Value Added Tax Act. So if you are authorized, or if you have already obtained the approval from the Commissioner General to pay VAT on cash basis, then the time of supply, those provisions we discussed earlier are not applicable to you because you are a special person who has got the approval to pay tax on cash basis. So what's the time of supply? Time of supply is the time of receiving money from the customer. At that time only you are liable to pay tax. Now we look at question number 4 to understand the concept of time of supply. Identify the time of supply in relation to the following circumstances. Goods were delivered on 30th December 2018 and the invoice was issued on 27th January 2019. Goods have been delivered on 30th December 2018 and the invoice has been issued on 27th January 2019. That is after 10 days. So the date of invoice cannot be treated as the time of supply because it has been issued after 10 days from the delivery of goods. So the time of delivery of goods, which is 30th December 2018, is the time of supply in this situation, in the first circumstances. Second one, goods were delivered on 20th December 2018 and the invoice was issued 27th December 2018. So within 7 days, the invoice has been issued after delivery of goods. So the invoice has been issued within 10 days. Therefore, the time of invoice, the date of the invoice, shall be treated as the time of supply, which is 27 December 2018. Third one, invoice was issued on 27 December 2018 and goods were delivered on 30th December 2018. Time gap is only 3 days. but they have issued the invoice first. They have delivered the goods later. So the date of the invoice, the issuance of the invoice has happened first. So that shall be the time of supply. 27 December 2018 shall be the time of supply. Right. Now we'll come to the registration requirement. As I told you, only a registered person can charge VAT. The registered person is also defined in section 14 of the Value Added Tax Act. Any person registered by the Commissioner General of Inland Revenue in the following manner shall be a registered person. The Commissioner General shall register a person for value added tax where an application has been made by any person for registration under section 10. We are going to discuss section 10 in the next slide. Or the Commissioner General, having regard to the nature of the activities, is of the opinion that a person is required to be registered but has not made an application to that effect. That is normally known as forced registration. So he is liable to register, but he has not made an application. The Commissioner General is of the view that he should be registered. So you can, if you are liable to register, you can make an application and get the registration. Otherwise, you are forced to register by the Commissioner General of Inland Revenue. Whatever the way, if you are registered, you have to pay or you have to charge VAT. Now look at the registration requirements. The persons who are liable to register for VAT. Every person who carries on or carries out a taxable activity in Sri Lanka shall register for VAT if A. Total value of taxable supplies in a taxable period. You know, taxable period could be 1 month or 3 months period. Has exceeded rupees 3 million at the end of the taxable period, or the total value of taxable supplies has exceeded rupees 12 million in any 12 months period. Right? This is basically based on your historical data. After the taxable period, you look at your history and you check whether your taxable supplies has exceeded rupees 3 million or not. Or after the year end, after 12 months period, you look at your history and to see whether your total value of supplies, taxable supplies, has exceeded 12 million or no. If you have exceeded these thresholds, then you must get the registration from the Commissioner General of Inland Revenue. Right? So B, the same thresholds are there. The only difference is these sound predicted information. If you believe, or there are reasonable grounds to believe that total value of taxable supply is likely to exceed. It has not exceeded. You have grounds to believe that it will exceed 3 million in any taxable period or 12 million in any 12 months period. Right? Then you must also apply and get the registration under value added tax. That is based on estimated figures. Item C, wholesale and retail suppliers. Wholesale and retail suppliers, other than manufacturers and importers, if total supplies of any consecutive 3 months period exceed rupees 12.5 million. If you are doing wholesale or retail, and if your total supplies for any consecutive 3 months period exceed rupees 12.5 million, you must submit an application and you must register under the Value Added Tax Act. So actually these thresholds were applicable till 31st December 2019. The government has increased the above thresholds, these thresholds, to 25 million a taxable period or 300 million a year for 12 months period after 1st January 2020. So these are the new thresholds that are applicable after 1st January 2020. Question number 5. Determine whether the following persons are required to be registered under the Value Added Tax Act prior to 31st December 2019. Prior to 31st December 2019. So we'll have to apply the all thresholds and see whether they have exceeded the threshold or not. A company which is engaged in sale of manufactured goods with an annual turnover of 50 million. Annual turnover of 50 million. What was the threshold prior to 31st December 2019 for 12 months period? It is 12 million. Now this company's annual turnover is 50 million. They have exceeded the threshold. So the company A is required to register under the Value Added Tax Act. Company A is required to register under the Value Added Tax Act. An individual, the second one, an individual who provides consultancy services with an annual income of 6 million. Annual income of 6 million. Annual threshold was 12 million before 31st December 2019. So this person's annual income was 6 million. So which is less than the threshold. So he is not required to register under the Value Added Tax Act. Third one, a company which is engaged in the sale of locally purchased goods. Locally purchased goods. Sale of locally purchased goods, which can be wholesale or retail, with an annual turnover of rupees 30 million. So in relation to wholesale and retail supplies, the threshold was, item C, threshold was 12.5 million for 3 months period. 12.5 million for 3 months period. That means 12.5 million into 4 for a year. That is 50 million a year. This company's annual turnover was 30 million, which is less than the threshold. So this company is not required to register under the Value Added Tax. Company is not required to register. Right. So when we discuss about section 2, I told you that there should be a taxable activity carried out in Sri Lanka to charge VAT. The taxable activity should be carried out in Sri Lanka. So if you are doing a taxable activity, under that you can supply goods or services. So the circumstances are given in the Act to identify the goods and services that are supplied in Sri Lanka. The situations where goods and services are deemed to be supplied in Sri Lanka. That is given in section 9 of the Value Added Tax Act. So if you are supplying goods and services in Sri Lanka only, you are liable to pay, you are liable to charge VAT. Goods or services shall be deemed to be supplied in Sri Lanka where the supplier carries on or carries out a taxable activity in Sri Lanka. If your taxable activity is in Sri Lanka, you supply goods and services in Sri Lanka. And the goods are in Sri Lanka at the time of supply. When you supply, If the goods are in Sri Lanka, then your supply is also in Sri Lanka. And the services are performed in Sri Lanka by the supplier or his agent. So services performed in Sri Lanka. If you perform the service outside Sri Lanka, that is not liable. That is not liable. That is not chargeable with VAT. So question number 7. Advise whether a company engaged in the business of providing management consultancy services is chargeable with VAT on the following transactions. The company is providing management consultancy services. Services rendered in Sri Lanka to clients in Sri Lanka. Services have been performed in Sri Lanka. So it is chargeable with VAT. It is chargeable with VAT. Second one, services rendered in Sri Lanka to clients outside Sri Lanka. Well, we don't need to worry about the recipient of the service. It could be clients in Sri Lanka, it could be client outside Sri Lanka. The place of performance of the service is important. So they have rendered the service in Sri Lanka. Recipient is outside Sri Lanka, that's not a problem. So as long as the services are rendered in Sri Lanka, those are chargeable with VAT. The second one is also chargeable with VAT. Third one, services rendered outside Sri Lanka to clients outside Sri Lanka. Services rendered outside Sri Lanka to clients outside Sri Lanka. So under the third item, since the services have been rendered outside Sri Lanka, that is not chargeable with VAT. That is not chargeable with VAT because the services have been rendered outside Sri Lanka. Right. Now we'll look at the supplies which are not taxable, non-taxable supplies. When we discuss about the section 2, I told you that supplies can be divided into two: supply of taxable supplies and non-taxable supplies. So here we are going to discuss about the non-taxable supplies. A registered person is chargeable with VAT only in relation to the taxable supply. The following supplies are not subject to VAT: excluded supply and exempt supply. So we need to see what these are, what these excluded supplies are, what these exempt supplies are, in order to have a better understanding of non-taxable supplies. We'll look at excluded supplies first. The tax shall not be charged on the wholesale or retail supply of goods other than on the wholesale or retail supply of goods. Now here, if you look at this carefully, the first part of the explanation says, tax shall not be charged on wholesale or retail supply of goods. So you can't charge VAT on wholesale or retail supply. But it also says, other than on the wholesale or retail supply of goods by a manufacturer of such goods, and goes on. Right? So that is why I told you, excluded supplies are not generally treated as taxable supplies. they are treated as non-taxable supplies. But there are situations where we will have to charge VAT on excluded supplies also, wholesale and retail trade also. These are the 5 situations where VAT is charged on wholesale or retail supplies. That is why I told you there are situations where excluded supplies are also classified under taxable supplies. These are the situations. By a manufacturer of such goods, if the manufacturer does wholesale or retail trade, he has to pay VAT. By an importer of such goods, or by a supplier who is unable to satisfy the Commissioner General as to the source from which the goods supplied by him were acquired. So if you are unable to satisfy the source of purchase, you are liable to pay VAT on it, even if it is an excluded supply. Any person who supplies goods under any tender agreement, they're liable to pay VAT on it, though it is a wholesale or retail trade. Item E, any person or partnership having total supplies for any consecutive period of 3 months in any calendar year more than 12.5 million rupees, including the above supplies and any supplies exempted under the first schedule to the Act. Now, this is very important. Any person or partnership having total supplies for any consecutive 3 months period for more than rupees 12.5 million, including the above supplies. Right? Supplies that are liable. And also, any supplies exempted under part 2 of the first schedule. Now, when we calculate whether a partnership or a person is liable to pay VAT on wholesale or retail, we will have to consider the value of exempted supplies also. If your total value, liable supplies, exempted supplies, zero rated supplies, if all the supplies, value of all supplies is more than 12.5 million for 3 months period, you have to pay VAT on it. You have to pay VAT on it. Now we'll look at this question to understand that properly. Question number 8. A company which is registered for VAT has made the following for the quarter ended 31st March 2019. Sale of manufactured goods of rupees 25 million. Sale of manufactured goods, you know it is liable. Sale of locally purchased goods, that could be wholesale or retail, 8 million. Determine whether the company is liable to pay VAT on the sale of locally purchased goods of rupees 8 million. Now, what is the value of total supplies for this 3 months period? 33 million. The total value of supplies has exceeded the threshold of 12.5 million for that quarter, for that 3 months period. So, they are liable to pay VAT on this 8 million also. The company is liable to pay VAT on sale of locally purchased goods. Under question number 8, the company is liable to pay VAT on sale of locally purchased goods of rupees 8 million, because the total value of supplies for that particular quarter has exceeded the threshold of 12.5 million. Question number 9. A company which is registered for VAT has made the following for the quarter ended 31st 31st March 2019. Sale of manufactured goods, rupees 8 million. Sale of locally purchased goods, 1 million. That's the wholesale or retail part. Determine whether the company is liable to pay VAT on sale of locally purchased goods of rupees 1 million. No, the company is not liable to pay VAT on sale of locally purchased goods of rupees 1 million because the value of total supplies for that particular quarter has not exceeded the threshold of rupees 12.5 million. The company is not liable to pay VAT on sale of locally purchased goods. Right. Well, that's about the excluded supplies. Generally, excluded supplies are non-taxable supplies, but there are situations where we need to pay VAT on excluded supplies. Now, we come to the exempt supply. That is the other component of non-taxable supplies. So I have shared with you a PDF document. I hope there are 13 or 14 pages there. All the supplies that are exempt from VAT are listed in that document. They are listed under three categories. The first one is supply or import. That means when you import, you don't need to pay VAT. And when you supply also, you don't need to pay VAT. Second one is supply. The exemption is applicable only when you supply. But when you import the same item, you have to pay VAT on it because only the supply is exempt. Item C, import. The exemption is given only when you import those goods into Sri Lanka. But when you supply, after you import, you supply it to your customers, right? But that is not covered. Only the importation is exempt, right? So just look at the list and see the items that are exempt from value-added tax. So if a supply is exempt, no tax shall be charged on the supply of goods or services and the importation of goods in the Fresh Schedule to the Act. Accordingly, supplies and imports are not taxable unless zero rated under Section 7. Exemptions are provided in the Fresh Schedule under the following categories that I explained earlier. You have to go through or just have a look at the items that are listed in the exempt schedule. Right. Basically, what we discussed so far is the part A of section 2. Part A of section 2. Right? Part A of the charging section. Now we are going to discuss the part B of section 2. That is when the VAT shall be charged at the time of importation of goods into Sri Lanka by any person. Right? So VAT on importation of goods. VAT on importation of goods shall be charged, levied and collected as if it is a custom duty. So it is collected as if it is a custom duty like cess, PAL, custom duty. You have to pay VAT also on the importation. After you import goods into Sri Lanka and before you clear the goods, you have to inform the Commissioner General within 14 days that you have imported goods into Sri Lanka and you need to clear them and you have to get a identification number from the Commissioner General of Inland Revenue to clear the goods. But if you import under the personal baggage, or if you are already registered under section 10, you don't need to get a special identification number to clear the goods. You can use the same number that has been allocated to you under section 10. Right. Now we come to the calculation part of VAT, how the VAT payable is computed. The amount of VAT payable is computed as follows. Output VAT less allowable input VAT. The difference between these two is the VAT payable. Now we will have to understand what this input VAT is and how it is computed. Output VAT, first we look at the concept of output VAT. Output VAT is computed by applying relevant VAT rates on the value of supply of goods or services. So it is calculated by applying the relevant rate on the value of supply. Value of supply. You have to ascertain the value of the supply, and you will have to apply the rate on it and calculate the output VAT payable. Output VAT. So what is meant to, how to calculate the value of supply is given in section number 5 of the Act. Well, if you do your supply for a consideration in money, you do the supply and in return you get money. Value of supply is the consideration minus VAT. That is the amount you receive from your customer minus VAT. Or open market value, whichever is higher. There are two amounts, consideration minus VAT and open market value. You have to take the higher value of these two. Generally, goods and services are supplied at the open market value. Generally, consideration minus VAT or the open market value are the same value. But when we do transaction among group companies, among related companies, among related parties, transactions may not happen at the arm's length price or at the open market value. So we have to be very careful, because the value of supply, you have to pay VAT on the value of supply, which is the higher value of open market value or the consideration minus less. If you do your supply at a price which is less than the open market value, still you are liable to pay VAT on the open market value. Right. So that is applicable when you do the supply for a consideration in money. If the supply is not for a consideration in money or partly in money, we'll have to take the open market value as the value of supply. So we know the value of supply. Now we will have to apply the relevant rates on the value of supply to calculate the output VAT. Now we look at the tax rates that are applicable, that are given in the Act. The following rates are applicable on the value of taxable supplies of goods or services: zero rate and the standard rate. Zero rate is zero rate. Standard rate is 15% before 1st December 2019. Prior to 1st December 2019, the standard rate was 15%. The government has reduced the standard rate from 15% to 8% with effect from 1st December 2019. Now the current VAT rate is 8%. Now we look at the zero rated supplies. So there are taxable supplies. There are supplies that are taxable, and there are supplies that are taxable at the standard rate of 15% or 8%. Now we'll have to look at the supplies that are taxable at 0%. Other supplies are taxable at the standard rate. So zero rated supplies are given in section 7 of that. Under 3 situations, zero rated supplies are given. Item number 1 or A, goods shall be zero rated where such goods are exported by the supplier. If you are an exporter, if you export goods, you are doing a zero rated supply. So export comes under zero rated supply. And B, services shall be zero rated where the supply of such services are directly connected with any movable or immovable property outside Sri Lanka, repair of any foreign ship, any goods imported into Sri Lanka for the purpose of re-export or import, trade, copyright, patent, license, trademark, or similar intellectual property right, to the extent that such right is for use outside Sri Lanka, international transportation, computer software development, so client support services provided, a provision of services to overseas buyers by a garment buying office. So there are some services listed with some conditions. So those are also treated as zero rated supplies. What is important here is item C. Any other service provided by any person in Sri Lanka to another person outside Sri Lanka to be consumed or utilized outside Sri Lanka shall be zero rated, provided that payment for such service in full has been received in foreign currency from outside Sri Lanka through a bank in Sri Lanka. There are 3-4 conditions that you need to satisfy here to be zero rated. You have to provide the service in Sri Lanka. The recipient of the service should be a person outside Sri Lanka, and he should utilize or consume the service outside Sri Lanka. And for providing that service, you must get the payment in foreign currency from outside Sri Lanka through a bank in Sri Lanka. So if you satisfy all these conditions, you are doing a zero rated supply. In the case of zero rated supply, no tax shall be charged in respect of such supply. You know, on zero rated supplies, the applicable VAT rate is 0%. Basically, you are not charging VAT. You are not charging VAT. But the supply shall in all other respect be treated as a taxable supply. Even though no tax is charged, it shall be classified as shall be treated as a taxable supply. Question number 10. Determine the applicable tax rate in respect of the following supplies. Export of goods, as you know, it is 0%. 0%. Sale of goods to an exporter. Sale of goods to an exporter. You are not directly exporting, but you are doing indirect export. You are supplying to exporter. But that is not covered under zero rated supplies. We will have to apply the standard rate of 15% on sale of goods to an exporter. Third one, consultancy services provided outside Sri Lanka for payment in Sri Lanka. services provided outside Sri Lanka for payment in Sri Lanka. So this is outside the scope of VAT. Outside the scope of VAT. Because you have provided the service outside Sri Lanka. It is not liable. It is not liable. It is outside the scope. Consultancy services provided in Sri Lanka to a client outside Sri Lanka for payment in foreign currency and the service is consumed outside Sri Lanka. The service has been provided in Sri Lanka. The client is a person outside Sri Lanka and for which the payment has been received in foreign currency and the service is consumed. Service has been consumed outside Sri Lanka. So all the conditions have been met. Therefore, this is a zero-rated supply. Zero-rated supply and the applicable tax rate is 0%. Consultancy services provided in Sri Lanka to a client outside Sri Lanka for payment in foreign currency and the service is consumed in Sri Lanka. If the service is utilized outside Sri Lanka or consumed outside Sri Lanka only, you can get the 0%. Otherwise, we'll have to apply the standard rate of 15%. Now it is actually 8% after the change in the rate. Earlier it was 15%, the standard rate. Consultancy services provided in Sri Lanka to a client outside Sri Lanka for payment in Sri Lankan rupees and the service is consumed in Sri Lanka. Two conditions are not satisfied. The payment has been made in Sri Lankan rupees and the service has been consumed in Sri Lanka. Therefore, we can't apply 0% here. We will have to apply the standard rate of 15% or 8% in relation to the last supply. Right. Now we have a special adjustment here. Now, as I told you, VAT is paid on accrual basis. So therefore, there can be situations where there are bad debts that you will have to incur when you do businesses, when you supply goods or services. For money to be received in a future period. So therefore, there should be a provision to make adjustment for bad debts as well. So there is a provision in the Value Added Tax Act under section 24 of the Value Added Tax Act. It says if you incur any bad debt, it can be deducted. It can be deducted from the amount of the VAT payable because it is if it is not allowed, it is not fair. So it has been allowed. It has been allowed. If you incur any bad debt, you can deduct it. You can claim it. But later, if you recover it, after you write it off, if you recover it later, you will have to include it and pay taxes accordingly. Right. We'll look at section number 11 now as to how we should adjust bad debts when we calculate the VAT payable. Based on the information, following information, compute the output VAT for the taxable period ended 31st March 2019. Sale of goods locally, local sales 52.8 million, export of goods 15.3 million, bad debts, local sales 1.5 million, export sales 1 million, recovery of bad debts of local sales 1.8 million. So you need to calculate the output VAT component for this particular taxable period. So as I told you, bad debts incurred can be deducted and recovery of bad debt should be included. So how do you calculate local sales? How do you calculate the output VAT on local sales? 52.8 million is the value of supply, the value of the goods sold. Bad debts incurred in relation to local sales, 1.5 million that you can deduct. So from 52.8 million, you deduct 1.5. Recovery of bad debts of local sales, 1.8 million. So that you will have to include it. Recovery of bad debts. You add it to 52.8 million. So 52.8 million, 52.8 million minus 1.5 million plus 1.8 million. Answer is 53.1 million. 53.1 million. On that, we have to apply the standard rate of 15% because this is a period prior to the changes in the tax rate. So 53.1 million into 15%, output VAT on local sales comes to 7,965,000. 7,965,000. That is the VAT on output VAT on local sales. On exports, export of goods, the value of the supply 15.3 million. Bad debts, export sales 1 million. So you can deduct that 1 million from 15.3 million. Then the value of supply of export sales comes to 14.3 million. The applicable tax rate is 0%. 14.3 million into 0%, output VAT is 0. The total output VAT comes to 7,965,000, which is the output VAT on local sales. Right. So that's about the output VAT. Now you know how to calculate the value of supply. You know the tax rates. Now you know how to calculate, how to adjust bad debts, and you know how to calculate. Now we have to look at the input VAT also. There can be two types of input VAT. When you purchase goods and services from a registered person, from another registered person, he is also charging VAT from you. When you buy locally goods and services from another registered person, he is also charging VAT from you. You have to pay VAT on it. So on your local purchases of goods and services, you are paying VAT. And that is a part of your input VAT. Secondly, when you import goods into Sri Lanka, you are liable to pay VAT on the importation. Right? So that is also a part of your input VAT. So you have two types of input VAT. Input VAT paid on local purchases, input VAT paid on importation. Right? So these input VAT can be set off or can be deducted from the output VAT that you have collected from your customer. Only the balance is payable to the Department of Inland Revenue. Right? Only the balance is payable to the Department of Inland Revenue. But when it comes to claim of input VAT, when you are going to deduct input VAT, there are some restrictions. All the input VAT that you have paid on your purchases and imports are not deductible. There are some restrictions. There are not allowed to be claimed. So we will look at the restrictions in claiming input VAT now. Input tax in respect of motor vehicles. Input VAT in respect of motor vehicles is not deductible. But it says input tax in respect of motor vehicles other than motorcycles, bicycles, motor coaches provided by an employer for the transportation of his employees, motor vehicles used for excursion tours or for the transportation of tourists, or transportation of goods or hiring cars, or motor vehicles forming part of any stock in trade of any taxable activity. Under these situations only, you can claim input VAT in relation to motor vehicles. Other than that, you cannot claim or you cannot deduct input VAT paid on in respect of motor vehicles. That's one of the restrictions we have when it comes to deduct input VAT. Right. The second restriction is input tax not connected with the taxable activity is not deductible. As I explained, when I explained section 2, I told you that you can do taxable supplies and you can do non-taxable supplies. You can do taxable supplies and you can do non-taxable supplies, right? If your input VAT is not connected with taxable supplies, or if it is connected with non-taxable supply, you can't deduct it. Because the supply you make is not taxable. If the supply is not taxable, you can't claim the input VAT also. Now I would like to ask you a question. It's a very popular question. What is the difference between zero rated supplies and exempt supplies? Difference between zero rated supplies and exempt supplies. On zero rated supplies also you don't charge VAT. VAT is charged at 0%. So technically there's no VAT on it. On exempt supplies also you don't charge VAT. Right? As far as output VAT is concerned, both are same. But when it comes to input, claim of input, you can claim input VAT in relation to zero rated supplies because that comes under taxable supplies. But you can't claim input VAT in relation to exempt supplies. That's the difference between zero rated supplies and the exempt supplies. Next one, input tax not supported by a tax invoice or custom goods declaration. So when you deduct input VAT, you have to have a document to support it. It could be a tax invoice, we'll come to that later, or it could be a customs goods declaration. If I imported goods into Sri Lanka, the source document is the customs goods declaration. We call it CUSDEC. You have to have a CUSDEC or a tax invoice when you claim input, when you deduct input. If you don't have a CUSDEC or a tax invoice, you can't deduct input VAT. And also, there is a time period given to deduct the input VAT from your output VAT. If it is a tax invoice, you have 12 months period to deduct it from your output VAT. After that period, you can't deduct it. If it is a CUSDEC, you have 24 months period from the date of the CUSDEC to deduct it from your output VAT. After that period, you can't deduct it. So subject to these restrictions, we can deduct our input VAT from the next one. That is also a special adjustment to VAT payable, where we have tax credit notes and debit notes. What happens here is, now if you have overcharge or undercharge VAT in the original invoice, now let's say as an example, you issue the original invoice with an incorrect amount of value of supply. If the value of supply is not correct, the VAT component is also not correct. So you have issued the original invoice by undercharging or overcharging VAT. So later, after you find that there is an error in the original invoice, you can issue a tax debit note or tax credit note to rectify that error, right? So when you issue a tax credit note or debit note, there are adjustments that we need to do when we calculate the VAT payable. Anyway, with regard to claim of input VAT, because of issuing of any debit note or credit note, you have to do it within 6 months from the date of the original invoice. From the date of the original invoice, you have only 6 months period if you want to do any adjustment to input VAT. Then after that period, you can't do any adjustment to input VAT. But with regard to output VAT, you can do the adjustments, right? Well, these are the adjustments that we need to do because of debit notes or credit notes. From the supplier's point of view, I'm looking at the table. From the supplier's point of view, if he issues a tax debit note, he issues a tax debit note where he has undercharged VAT in the original invoice. Where he has undercharged VAT in the original invoice, he is supposed to issue a debit note, tax debit note. So if he issues a tax debit note, the adjustment would be he has to pay as output VAT. Originally he has undercharged, now he is collecting, so therefore he has to pay as output VAT. So if he issues a tax credit note, because he has overcharged VAT originally, he can claim as input VAT. If he issues a tax credit note, he can claim as input VAT. From the purchaser's point of view, if he receives a tax debit note issued by the supplier, he can claim as input VAT. If he receives a tax credit note issued by the supplier, he has to pay as output VAT. Now we'll look at question number 12. ABC Limited has issued a tax invoice to XYZ Limited for a value of rupees 1 million and VAT charge is rupees 150,000. Later it was found that the value of supply should have been rupees 1.1 million. They issued the invoice for 1 million. The value should have been 1.1 million. Therefore, they have undercharged VAT. They have undercharged VAT. The amount is 100,000 into 15%, 15,000. 15,000 they have undercharged. So what action should be taken to adjust the undercharge of VAT? The ABC Limited has to issue a debit note, tax debit note for rupees 15,000 to XYZ Limited. ABC Limited should issue a tax debit note for rupees 15,000 to XYZ Limited. What is the impact on VAT liability of ABC Limited and XYZ Limited? So when the supplier issues a tax debit note, he has to pay it as output VAT. So ABC Limited has to pay 15,000 as output VAT. XYZ Limited is entitled to claim it as input VAT. XYZ Limited is entitled to claim it as input VAT. Right, the following question number 13. The following information is extracted from the books of accounts of PQR Limited engaged in the business of manufacturing of goods for the taxable period ended 31st March 2019. All transactions given below are exclusive of VAT where applicable. Output is given. Supplies to VAT registered person 3.5 million. Supplies to non-VAT registered persons 2.5 million. Input, import of raw materials 3 million. Local purchase of raw materials from VAT registered persons 1.5 million. Purchase of raw materials not supported with tax invoices 1 million. Salaries and wages 1.8 million. Calculate the VAT payable for the taxable period ended 31st March 2019. I have given you the answer. Let's have a quick look. Under output VAT, we have supplies to VAT registered person 3.5 million. That's the value of supply. So it is not zero rated. So I have taken the standard rate of 15%. The output VAT on that is 525,000. Supplies to non-VAT registered persons. We don't need to worry about the persons, whether they are registered or not. If you are registered, you are liable to pay, and you are liable to collect VAT from the customers, whether they are registered or not. 2.5 million is the value of supply, and the tax rate is 15%. VAT is 375,000. So the total value of supply 6 million, and the VAT component is 900,000. So from that we have deducted the allowable input VAT. Import of raw material 3 million into 15%, 415,000 they have paid on importation. And on local purchase of raw material from VAT registered persons, 1.5 million into 15%, 225,000. Purchase of raw materials not supported with tax invoices. As I told you, if you are not in a position to support the input tax claim with the proper tax invoice or cost deck, you are not allowed to claim that input. So that is not allowed. Salaries and wages. On salaries and wages, VAT is not applicable. When you pay salaries and wages, you are not liable to pay VAT on it. So the total input VAT comes to 675,000. Output VAT is 900,000. The balance VAT payable is 225,000 that they need to, PQR Limited has to make this payment to the Department of Revenue. Question number 14. In the above question number 13, in addition to the output mentioned, if the company has exported goods amounting to rupees 750,000 and supplied exempt goods amounting to rupees 1 million, compute the VAT payable for the taxable period. What is new here is the export of rupees 750,000. It is treated as a taxable supply, which is taxable at 0%. And we have exempt supply of rupees 1 million also, that is a non-taxable supply. Let's look at the answer. Output VAT, we have tax supplies liable at standard rate that you have calculated earlier, 6 million into 15%, 900,000. Supplies liable at zero rate, that is export 750,000, the applicable rate is 0%, output VAT 0. Taxable supplies, that's the total of these two, 6,750,000, and the VAT output VAT is 900,000. Then we have exempt supplies, 1 million. On exempt supplies, we are not collecting VAT. Output VAT is 0. The total value of supply is 7.75 million and output VAT component is 900,000. Right. Now, when it comes to claim of input, as I told you, input VAT connected with non-taxable supplies is not deductible. We have a non-taxable supply of rupees 1 million here as exempt supplies. So input VAT attributable to exempt supplies is not deductible. So I have taken the total input tax they have paid from the previous answer, which is 675,000. And I have divided it by the total value of supply. And I have multiplied it by the taxable supplies to compute the input VAT attributable to taxable supplies. That is the input VAT that can be deducted. So even though you have paid 675,000, you are allowed to claim 587,903 because a part of this input is connected with non-taxable activity, which is not allowed to be claimed. So the balance VAT payable comes to 312,097 rupees. Right, that's about the calculation part. Now we'll have a quick look at the administration components of the administration provisions of the value-added tax. As I told you, if you are a registered person, if you are supplying to another registered person, you have to issue a tax invoice within 28 days after you make the supply. After the time of supply, you have 28 days to issue a tax invoice to your purchaser. And the composition of a tax invoice, these are the items that should be there in a tax invoice: the name, address, and the registration number of the supplier, and also the buyer, date of the tax invoice, and also its serial number, the date of supply, description of the goods and services, quantity or volume of the supply, value of the supply, the tax charge and the consideration for the supply, and also the word tax invoice should be there. You just can't say it as an invoice, the word tax invoice should be there. So these items or the components should be there in a tax invoice, otherwise it is not treated as a valid tax invoice. Tax invoice on imports, the CUSDEC is treated as the tax invoice in relation to imports. Retaining copies of tax invoices, you are required to retain copies of the tax invoices for 5 years. After the taxable period, you have to give the original to your purchaser and you need to keep copies for 5 years period. And issue of copies of tax invoices. Now you know, if you want to claim VAT, if you want to deduct VAT, you have to have a tax invoice. But there can be situations where the original tax invoices are misplaced. So in such scenarios, you can ask for a duplicate or a copy of the tax invoice from your supplier. But in that case, a copy of the tax invoice is issued. It has to be very clearly marked as a copy. Issue of non-tax invoices, where you make where you do the supply to a person who is not registered for VAT purposes. You don't need to issue a tax invoice to him. You can issue a normal commercial invoices with the total consideration including the VAT component. You don't need to separate it and issue an invoice. You can put the total amount, total consideration, and issue it to that customer. So filing of VAT returns as once you register under Value Added Tax Act, you are liable to submit VAT returns to the Department of Inland Revenue. It has to be done within 1 month after the end of the taxable period. After the end of the taxable period, you have 1 month period to submit the VAT return to the Commissioner General of Inland Revenue. And also in relation to payment of tax, if the taxable period is 1 month period, you have to make the payment on or before 20th of the following month. After every month you need to make the payment. And also if it is a 3 months period or quarterly taxable period, on monthly basis you need to make the payment on or before the 15th of the following month. And after the taxable period, on or before the 20th of the immediately the following month, immediately after the quarter. So simplified the last final part of the presentation. Simplified value added tax, generally known as SVAT. What happens here, I will explain the background here for you to understand this concept. Now, as an example, if you take a exporter, he is doing exports which is chargeable at 0%. That means he is not supposed to collect output VAT from his customers. If he is exporting, he is not supposed to collect VAT from his customers. So his output VAT is 0. He's not collecting any VAT. But when he purchases locally or when he imports, he has to pay VAT. So he has input VAT, but he doesn't have output VAT. So he won't have a tax payable at the end. He will have a tax refund at the end because his input VAT is more than his output VAT. Output tax is 0, and he is liable to pay VAT on purchases and imports. So he has input VAT. So he will end up with a refund at the end. So this refund or the input VAT overpayment has to be paid back to him by the Department of Inland Revenue. When he purchases, he pays to his suppliers. Then those suppliers are liable to pay it to the Department of Inland Revenue as their output VAT. So the Department of Inland Revenue is liable to pay it back to the exporter because he is entitled for refunds. Right? So that is the exporter's money which is going rounds and rounds. Right? So therefore, the exporters were in trouble. They had a lot of financial issues, cash flow issues because of this VAT system, VAT refunds. So the government came with the new system called simplified value added tax. What happens is, here we have two kinds of registrations. Persons who are entitled for refunds may register under this scheme as a registered identified purchaser. They are called RIPs. Those who are entitled to refund can register as RIPs. And those who are supplying to RIPs can register as RISs, registered identified suppliers. Right. So these are the persons who are liable to, who are entitled to register as RIPs. Exporter of articles or services, registered persons engaged in any strategic development project, registered person engaged in any specific project, suppliers who provide value-added services to an exporter, persons registered under Section 22(7), any registered person who supplies to any registered person mentioned above, if the value of supplies exceeds 50% of the total supplies. So these persons are entitled or they're entitled to register as RIPs. So how does SWAT operate? How this is operating? What happens is all RIPs, registered identified purchasers, are provided with SWAT credit vouchers by the Department of Inland Revenue. So some of you may have seen these vouchers. It's like let's say like a checkbook. There are vouchers. So those are given by the Department of Inland Revenue to all RIPs. So when a RIP purchases from a RIS, such RIS should issue a suspended tax invoice, which is not considered as a tax invoice, to the RIP. So when the RIS supplies to the RIP, he is issuing a suspended tax invoice. So what happens next? RIP should issue a simplified VAT credit voucher to the RIS without paying VAT in cash. So the RIS takes a voucher from the voucher book and give it to the RIS without paying VAT in cash. So there is no cash involvement there, right? There is no cash involvement there, only a voucher is involved there. So since the RIP does not pay the VAT component to the RIS, no refund will generate on such VAT. No refund will generate. If the RIS does not claim the SWAT credit voucher, such supply shall be deemed to be a taxable supply. Now, as the RIS, he is responsible to collect the SWAT credit voucher from the RIP. Otherwise, he will be in trouble because on such supply, he has to pay VAT in cash if he doesn't have a SWAT credit voucher. And also, if the RIS uses this suspended purchase for any other purpose other than the specified purpose, it shall be treated as a taxable supply. So the final question, here we have a SWAT adjustment also. Let's have a quick look. A Limited is a VAT registered company engaged in the business of manufacturing bags. The company is also registered under a SWAT scheme as a RIS, registered identified supplier. The information is given for the taxable period ended 31st March 2019. Turnover exclusive of VAT, local sales 6,084,000. Sales to exporters under SWAT scheme 1,716,000. That is a SWAT sales, suspended sales. Input VAT on imports and local purchases 843,000. On repairs to motor car used by the CEO 24,000. The company has collected SWAT credit vouchers of 257,400 on its suspended supplies. Calculate the balance VAT payable for the taxable period ended 31st March 2019. So this is how it is computed. Output VAT, we have two supplies, local sales and suspended supplies. So the values are given without exclusive of VAT. So local sales 6,084,000, on that 15%, 912,600. Suspended supplies 1,716,000. Tax rate is 15%. VAT component output VAT 257,400. Total of taxable supply 7.8 million, and the VAT output VAT is 1,170,000. So from that, we can deduct allowable input VAT on imports and local purchases, 843,000. We can deduct it, but as I told you, input VAT in respect of motor vehicles, though they are claimable in certain circumstances, they are not deductible in the situation given here. On repairs to motor car used by the CEO, that is not allowed to be deducted. So that input is not claimable. So the total input is 843,000. The total VAT payable is 327,000. Now this company is not liable to pay this 327,000, the total amount in cash, because he has received a SVAT credit voucher from a registered identified purchaser for the suspended supplies that he has made. So he has received a credit voucher for rupees 257,400. So he can deduct that from the total VAT payable. And after he deducted, after the value of this credit voucher is deducted, the balance VAT payable comes to 69,600. So this is how we do the VAT computation from the point of RIS when there are suspended supplies. So that's about the presentation on Value Added Tax Act. You enjoy the session, and thank you very much. I think if you have questions, you can ask now, or you can direct it to me through Sandharuvan sir.
Yes, Mr. Nabika, now shall we allow for 1-2 questions?
Yeah.
Yeah, one question has been raised by Lakshita Pereira. Can you look at that question, or do I need to read? You can go to chat option.
Yeah.
Can you see it?
Give me a minute.
Okay.
Lakshita Pereira's question. No?
Yes.
So in practice, if we have a firm who has both export sales and local sales, of which local sale is exempted, and also the firm is registered as a registered identified purchaser, then if the firm purchases goods or services from non-registered identified suppliers, then do we need to pay VAT for them? If so, it is refundable. So this is a practical issue that we are also facing. If once you get the registration as a RIP, those who are supplying to you should also get RIS status by registering as RISs under SVAT scheme, because otherwise, and also if as a RIS, if you don't, as a supplier, if you don't get this RIS status, RIPs may not buy from you because they will have to pay you in cash and they will end up with refunds at the end. So they prefer to buy from RISs, right? This is a practical question. What he says is correct. If a RIP buys from a person who is not registered as a RIS, there can be situations where he will end up with a refund. This is a practical, very good question.
Any more questions? So we can allow at least one question. Now he's asking another question. For SVAT, does it require accounting treatment?
For the purpose of maintaining records internally, and because you need to collect SVAT credit vouchers properly. Otherwise, as I told you when I did the last question, if you don't collect the SVAT credit voucher, you will have to pay that VAT on suspended supplies also. So you are required to maintain all these records. When you do a lot of suspended supplies, you are required to maintain all these records. For that purpose, you can maintain
Accounting records.
you can record all these asset transactions in the ledger itself.
Any more questions? Okay, it seems that you don't have questions. Okay, so we have come to a very fruitful guest lecture on value-added tax. Actually, it was very comprehensive, and even I learned a lot from the presentation. I know that Mr. Nadik might have a struggle to cover up everything within this 2-hour period. Right? During my conversation with him, actually, I felt like it is difficult to cover everything on that within this 2-hour period. But anyway, it was very comprehensive and it was very fruitful session. Actually, you covered everything within this 2 hours. So it was a challenge, I know that. So anyway, you have done a very good job. Udeshant sir, do you have anything to say? Until he joins, actually this is the second time that Mr. Nadika is doing this lecture. Last year also he did the guest lecture on VAT, and this year he accepted our invitation. Thank you very much for accepting our invitation. Actually, it is for your own younger generation, right? He's also one of our proud products. Therefore, we are very happy about him as well as his contributions towards the younger generation as you. Udeshant sir, anything that you want to? Udeshant sir? Udeshant sir, can you hear me?
Yes, Sandravan sir. Now,
Sir.
this is very fruitful presentation.
Yeah.
Hello.
Yes, sir, we can hear you.
Amidst with all these difficulties like in communication barriers at the beginning and at the mid also there were certain things, but again I was online throughout the session and I learned a lot through this lecture. As Nadik understand, we don't practice, but Sandaran sir has a small practice, so he might be knowing better than me, but I learned a lot from you. And also I suppose together with your explanation, with this recording, our students will be able to learn a lot later, no?
Yes,
Not
sir.
throughout this time. At the beginning of the sessions, there were 195 students. Now, this is the usual pattern. It has come down to
It is
160
natural,
due to
sir.
some the reason, but
Yeah.
Nadik would understand it. Students are still working on natural. And also, in this season, we should really appreciate Nadika's effort because of this tax deadlines. One other deadline is yet to come, I suppose. Tax
Yes.
return filing.
November 30th, yeah.
With all
Actually, he sent me the
with all this,
presentation. As if I am correct, at 1 a.m. So by looking at that mail, actually, I realized the conclusion that he has made.
One thing I'd like to clarify is, Nadika, the rate is 15% is altered to 8%. Please, and is
Yes, sir. It has been reduced to 8%. Yeah,
8%.
yeah. The current
But
rate.
everything other.
But on financial services is still taxable at 15%, sir. Other supplies 8%.
8%.
Yes.
Okay.
And thank you very much for this opportunity, sir. As a product of Department of Accounting, also I am also proud to and privileged to do this presentation for the second time. And so it's a different experience because also we are stuck. I live in Gampa. Unfortunately, we are under curfew now, so we are working from home. It's like 24/7, working from home 24/7. Right. So it's a different experience today. And this is my first lecture on virtually.
Actually, it was excellent lecture, Nadika. Yes.
Thank you very much, sir. I'm glad to hear that. And if our students have learned from the presentation, if they learned something from the presentation, that was the expectation. So thank you very much for the opportunity given, and especially stay safe during the pandemic. And I wish you all, department also, all the very best in future endeavors. And thank you very much.
And Ms. Nadika, one more thing. Would you mind of publishing this on the YouTube, because we have a YouTube channel. So what we do is we normally publish our lectures on YouTube channel. Then later on, students can access them and watch the video. So
no problems. I don't mind.
Right.
I don't mind it, because as long as sharing of our knowledge, right? So they have the opportunity to learn from this. I don't mind sharing our knowledge. That's not a problem, sir.
Okay, Ms. Nadika. So thank you once again for your valuable contribution and effort. And also, please be safe during this, COVID-19 pandemic situation. So wish you all the best for your future endeavors, and hope to get your service in the next year as well.
No problem. I'm very glad to do that. Thank you very much, and good night to you all.
Good night. Good night.
Thank you, Nadika. Thank you.
Okay, so that's
Good night.
bye. Good night.